So how do we add more jobs than expected, but unemployment goes up? Yeah, well, that's what was reported today. What's going on, guys? It's Ricky here with TechBud Solutions. I hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. Let me go ahead and jump right into it. So I just closed out my TQQQ position that I opened during today's free live session. So this was at market open. I trade live normally with my LPP team every morning. Today I opened it up to the public. So again, just another reason you should subscribe to the channel. Closed it out, left myself with my one lucky share, $6,300 on the day, and I closed it out. Overall upside potential based off previous highs versus downside risk. Downside risk outweighed my upside potential, and it was already showing lack of progress. We weren't really making much progress by the time that we hit highs of $37. I just didn't want to overcomplicate it. It's Friday. I wanted to lock in profits. And I'm still uncertain on why the market is in the green. Now, I wanted to share this with you guys because I think it's going to be very interesting next week. Now, the market right now is extremely bullish and it's forming higher highs and higher lows. Like NASDAQ is literally at 52-week highs. Take that, right? Look at this headline from Yahoo Finance. Stocks pop after May job reports top expectation. So let me share the report with you. Non-farm payrolls, 339,000. This isn't like a little bit of a more than expected. The expectation was 190 to 195,000. We came in nearly double of that. The prior was 294,000. I don't understand why with that news, the market isn't tanking. The part that's wild to me is that this article, and again, this is just my opinion, but this article says, oh, stocks were higher on Friday after a strong May job report with news late Thursday that the Senate passed. Yeah, the Senate did pass the debt ceiling bill. I get why the market is somewhat going up for that, although I think that it's already factored in. But clearing investors' fears over the U.S. debt default and worries about a market slowdown in the economy. If the economy is not slowing down and we have an up-and-coming rate hike on June 14th in just really a little bit under 2 weeks, Jerome Powell, the head of the Federal Reserve, has said if the economy is not slowing down, if we are not seeing a weaker labor market, they will justify another rate hike. And I want to follow up with this. I want to see if Yahoo Finance and all these other news outlets that are, because it's not just them, but Yahoo Finance, they're just trying to justify why the market's going up because it really doesn't make sense. The only thing that kind of makes sense is unemployment rate jumped up to 3.7%, but they almost don't even highlight that here. The 339,000 non-farm payrolls, again, that's their main focus, and then unemployment rate rose to 3.7%. That would make sense on why the market would jump up. And you might be asking, Ricky, well, why does higher unemployment cause the market to go up? Remember, it is all based off of the Federal Reserve and how they see things. And if they see that the economy is not slowing down, that more jobs are being added, 339,000 jobs in the month of May were added. The expectation was 195,000. So more jobs are being added, more jobs are being created. Does that sound like a slowdown to you? Well, no, right? And guess what? This bill that they just passed to print $2 or $4 trillion for the next year, right? For the next 2 years. Where do you think that money's coming from? How do you think we got here to the first place? We printed a bunch of money out of thin air, and then inflation goes up. We just are now agreeing to print another $2 to $4 trillion, and we just think that inflation is going to stay the same when we see that our labor market is now, 339,000 jobs are created. To me, this is kind of like red flags. And again, it's just my opinion. I might be overthinking it, but if I'm really looking at what put us here in the first place, it was all those stimmy checks that we were printing. Let's print this money. Of course, the market went up for a short period of time, and the market does rally when more money is printed to hope that it circulates. But this is not being handed out to the people, right? This stimulus bill is a little bit different. It's not the stimmy check bill, right? This, if anything, reduces government aid. So it's less to the people and more in defense spending, right? Overall, we're going to print more money. We're showing 339,000 jobs were created. Unemployment is at 3.7%. And we have an up-and-coming FOMC meeting, which is a rate hike or a rate cut or a rate pause, right? The Federal Reserve will have to announce it. What do you think is going to happen if they see, well, we just passed a $2 trillion bill, right, per year. Non-farm payrolls came in a little bit much hotter, nearly double than what was expected. Do you think that, Jerome Powell and the Federal Reserve will hesitate to raise interest rates? I don't, but again, just my opinion. I can see them justifying another rate hike because of this. And I think that these news outlets, when the market does begin to factor that in, and the market begins to correct itself a little bit over this overreaction of NVIDIA being worth $1 trillion, Apple being at 52-week highs, and then we kind of begin to scratch our head, well, didn't Apple announce that they were going to have a slowdown? The only reason NVIDIA is going up is because of their focus on AI, which is pretty hyped up right now, right? And their forecast of valuation, which is nowhere close to where they are right now. I think it's going to be very, very interesting. Obviously, I still wanted to go long. There's no reason to overcomplicate my trading. If market direction is bullish, I'll go bullish. But I think when things really begin to sink in and we can read through the lines, we won't be having headlines like this. It will literally almost be the exact opposite of markets dropping because of job reports. And I see this happen all the time where they just twist the narrative of their titles because, again, they're just trying to justify it. So I'm very excited to follow up and see how the market reacts to this actual economic data and how the Federal Reserve reacts, because ultimately that's what matters most. Not my opinion, not Yahoo Finance's, Jerome Powell and the Federal Reserve and what they do on June 14th. But don't worry, I'm going to keep you guys up to date. All you have to do is drop a thumbs up and subscribe to the channel. Also want to remind you again, we are running our biggest sale. Guys, there's literally 2 days left and 16 hours for our GTR giveaway. With that being said, we're running our biggest sale for LPP. You earn 20,000 entries for the GTR or 50K cash, which ends in 2 days. It's a one-time payment, lifetime access. It's $175 off. You'll get to watch me trade live every single morning right at market open with the LPP team, and it's the second link in the description down below. There will not be a bigger discount than $175 off ever, and there will never be more entries for the GTR giveaway. So if you've been waiting for the best opportunity to get in, then again, second link down below. You have 2 days left to enter for the GTR giveaway, and you get automatically entered. If you don't want to sign up for LPP, but you want to enter another way, the only other way you can enter is you can head on over to shoptechbuds.com, and for every $1 you spend, it equals 20 automatic entries. So the more you shop, the more entries that you earn. Again, 2 days, 16 hours, and 38 minutes. That's going to be the fourth link in the description down below. If you have any questions about what we talked about today, send me a direct message via Discord or via Instagram, and those are all linked in the description down below. I really do appreciate you guys' time. Hope that we're in thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take it easy, team.